Ayode Jebo is an investment banker with Afrinvest in downtown Lagos, Ikoyi to be precise, and that's where he's joining us to have a very small conversations to preview today's market briefing by Forte Oil. Ayode, good morning. Thanks for coming through.
Yeah, good morning, Bratton.
Yes, thank you. We know it's a really busy Monday and the first Monday of the new month, so we know you folks are extremely busy today, so we appreciate the few minutes you spend with us on the program. Talk us through these numbers I'm sure you've seen. What would you be expecting this company to tell the market this afternoon?
Yes, thank you. Looking at the result of Forte Oil, overall, based on my review, it's positive, impressive, and what I've noticed about looking at the top line, the sales and distribution of petrol, which contributed significantly to its top line performance. Top line performance would grow about 38%, while fuel will constitute over 60% of the total income, improved significantly by 41%. However, the income from power generation dipped by 12%, which is very obvious, can be explained as a result of the gas shortages and also the uproar within the Niger Delta.
Yes, in other words,
hello?
Yes, Ayo, I said you're looking at the Geregu Power PLC, which is a subsidiary of Forte Oil here, in terms of, that's what you're talking about.
Please, can you come again? I can't hear you.
Yes, I said you're talking about Geregu Power PLC, which is subsidiary of Forte Oil.
Yes, I said that the income generated from Geregu based on the half-year results, dipped by 12%, which is understandable, can be linked to the challenges within the Niger Delta. Looking a further review of Forte Oil results revealed significant jump in finance costs, which increased by over 600%. And I feel that is based on what at their presentation today, investors would, or even the stockbrokers will be asking them why the significant accumulation in net finance costs. Yes, last year the finance income helped reduce that effect, and that really took a toll on their bottom line, which declined by 12%. But overall, we'll see that the regulation of the downstream sector has begun to play a significant, a positive role in the performances of most of the companies within the downstream space.
Yes, let's talk about that, Ayo, a little bit. Ayo, if I may cut in there very quickly for a minute. Within the last 3 months, thereabout, April, May, and June, we've seen a few developments from the NNPC side in terms of price modulation for petrol prices, taking out subsidies from the marketplace, allowing pump prices to reflect market behavior and currency markets as well, that was introduced in June. You think these activities from the oil sector downstream, from the policy side, price setting side, and the FX markets flexible, beginning to impact on these numbers for the oil marketing stocks?
Yes, that is true. Going forward, it's going to be challenging if the PPRA does not review its price ceiling. So we expect with the adjustment we are seeing Naira, which closed at 320 Naira to a dollar for Friday, and when you compare that to the 285 Naira to a dollar was used to arrive at the 145 Naira per liter. So we're expecting in the nearest term that the PPRA will come up with the new price ceiling. If not, importing will not be profitable to some of these companies. They won't even be able to, they won't be willing to import, which will lead to the crisis that does result, the shortages of petroleum products. So it's really going to affect the business going forward if the CPRA does not come in on time to review upward the price ceiling for petrol.
Ayo, what do you think will be the key issue here for investors? Is it dividend that comes at the end of the year? Is it capital appreciation? And how do you think the Forty Oil will be looking at all the issues that it faced, the management, I mean, looking at all the challenges, the headwinds, and see how they can push things a little bit further up, taking advantage of the expected reforms, not just in the FX market, but on the side of the government, as far as you talk about the PPPI, the NNPC side?
Okay, thanks for that. I think what the management should begin to do now is to see how they can raise equity to reduce the burden of debt on their result, because, like I said earlier, if you check the top line, was impressive, but as a result of the significant jump in finance costs, that weighs significantly on the bottom line, which declined. So, they have a compelling story with the new reform within the downstream space, and which is now reflecting positively on their top line based on their distribution of fuel and white products generally, and also lubricants and greases, which has also improved. So investors would be willing to, if they are able to, investors will be willing to come in, and if they are able to get strategic investors to bring in equity, that will reduce the burden, and overall it will increase their profitability at the end of the day. So before shareholders, equity shareholders will still be concerned now, because no matter how impressive their performance may be, the bottom line, which is what goes to the equity holders, would continue to be hampered, and this would not be very encouraging to investors.
Ayode Jebo, we are at AfroInvest. We thank you very much for your time this morning, talking to us, bringing us ahead of that market briefing by Forty Oil Management.